Everybody, welcome back to the channel, or welcome to the channel if it's your first time checking us out. Today, we're going to talk about the financing process for financing a custom home. So if that's good information for you, maybe you're thinking about the custom home process, stay tuned. All right, like I said, today we're going to talk about the general process for financing a custom home. Going to be a lot of variations of this for sure, but I at least want to get you the basic information to help you kind of at least make a good decision at the beginning. Just real quick before we jump into that, let me just remind everybody, our channel is all about everything related to building a custom home. So financing, planning, design, building of the home, whatever it might be, anything about it. So if you have any questions on those topics, maybe you're thinking about building a custom home or just trying to see if it might be a good fit for you, definitely reach out, call, text, email, whatever, hit us up in the comments, whatever's easiest for you, whatever information we can provide for you, it's what we want to do. And if you are here in the Colorado area, we are a custom home builder that builds across the state of Colorado. So if you are in the area looking for a builder, we'd love the opportunity to chat with you a little bit. All right, so let's get into it. So the basic financing process. And like I said, there's going to be a ton of different variations for this, but let's just kind of go through the basic process. And like I said, reach out with questions. Number one is going to be the land acquisition. So, this goes typically two different ways. Sometimes our clients will have a piece of land that they've secured previously that's where they want to build their custom home on. The other times that we see is where folks want either to purchase a lot that we currently own as a builder, or they want us to help them go acquire another piece of land at the beginning of the process. So if you already have a piece of land, that's good for you. We'll kind of put that off to the side. You already have the land. That's kind of the first piece. You got to have a place to build the house. And we're going to assume that, whether you own it cash or you have a little loan against it, whatever it is, you already own the piece of land. For the people that don't have a piece of land ahead of time, whether they're buying it from a builder or you're buying, you're going out maybe with your local realtor and you're trying to find a piece of land that's a great fit for you. Number one is acquisition of that land. Now, land loans, a couple options. You can either buy the land cash, or for most folks, they typically take out at least a little bit of a land loan. So easy numbers, let's say you find a $200,000 lot you really, really like, and you don't have $200,000 cash laying around, at least that you want to spend on the piece of land, you can take out a loan for that piece of land. Most lenders are about 25% down payment requirement. So $200,000 piece of land, you're going to have to put about $50,000 down on that land. And then you acquire that piece of land. Now you have your $200,000 piece of property. You have a loan that you have to pay on it while you hold that land, and you've put $50,000 out of pocket. Now, the next piece where there's a little bit of a variation is based on who had that piece of land. If you buy it from a builder, the builder will typically have a contingency clause in the land purchase agreement that says, hey, you have to build with us within X amount of time. So within 12 months, 24 months, whatever it is, there's typically a contingency, and the builder says you have to build with us in a certain amount of time. Now, if you bought the land yourself, not related to the builder, then it's really just kind of depends on how your loan setup is. Most lenders like to see you build. They'll kind of let you carry that land loan for a year, sometimes 2 years, until they expect you to either refinance it and pay it off, or until you actually start to build a house on it, start that process. So that's the land acquisition piece. And of course, that's the beginning, because like I said, you have to have a piece of land to buy, or to build a house on rather. So once you have the land, now you're going to enter into an agreement with the builder. If you bought the lot from the builder, you're typically probably tied to the builder. Hopefully you've done some due diligence on the builder. And if you've had your own piece of land, or you just bought your own piece of land, hopefully you've done some due diligence and you've selected a builder that is just a great fit for the product that you guys are trying to build, and just a really good fit personality wise, because it's going to be, a couple year relationship. So you want to make sure you pick a builder that really fits with you. So once you've decided that, a builder's typically going to want some non-refundable down payment funds, some type of deposit to get started with that design and planning phase of the build. For us, we call it an LSA, a limited scope agreement. It basically says, hey, we're going to go through all the stuff that's required up until we start, digging the hole in the ground, essentially, or swinging hammers. So all the design stuff, the planning, the engineering, the structural engineering, everything that goes into that process to where you have buildable blueprints at the end of the day so you can start the construction of the home. We cover all that in our limited scope agreement. And, this is where it's going to vary a lot, but I think it's fairly standard in Colorado, depending on the scope of the project. That's probably going to be around kind of that $50,000 to $75,000. Now, that's more money that you're going to have to pay out of pocket, because again, you haven't been able to pull a loan for the build yet. So you're going to have that $50,000 to $75,000 typically out of pocket to get that process started. So now you've got a little bit of money in the land, depending on how you acquired the land, and you have some non-refundable deposit money that you've had to put down with the builder to get through that pre-construction phase of the operation. So once you get through that phase and you have what we call buildable plans, you can take those plans and a budget from your builder, you take that to a bank, and they're going to give you a construction loan. Now, that construction loan is, like I said, you can't pull the construction loan until you actually have plans to build the house and associated budget, because of course the bank wants to make sure that the plans make sense and that the budget makes sense, and so that they know how much money you're requesting to borrow is actually going to build the house. So once you pull or try to pull the construction loan, there's typically a couple things that are going to happen, and this is where a lot of people get tripped up and they don't understand the financing real well. Is whenever you pull the construction loan, close on that loan, you're typically going to have to put down 20 to 25% of the total build cost. So again, let's say for easy numbers, you're going to build $1 million house. That's what your custom home, now that's not the land, but the home itself is going to be $1 million. That's how much money you're asking for the bank to loan you so that you can build the house. Hopefully you do it for a little bit less, maybe a little bit more, but that's what the budget says is $1 million. So if the bank requires 20% down on that, they're going to require you to come to the table with $200,000. So 20% of the $1 million. Now, one nice thing about this is the money that you've already put into the project. So with land acquisition and those non-refundable pre-construction services, all that money can be counted toward, now with most lenders, I should preface this, most lenders will take that amount and they'll count that towards your down payment. So in the example we gave, let's say if you bought the land from the builder, or let's just say you bought the land anywhere, $200,000 piece of land, you put down $50,000. So you have $50,000 in equity you've already put into it. And let's say you had to put $50,000 down non-refundable for the pre-construction services. That's $100,000 that you've had to write a check for out of your pocket that the bank is going to credit towards equity in your favor. So now you had to bring $200,000 to the table for closing, 20% of that $1 million loan you're asking for, but you've already credited yourself $100,000 for the money you've already spent. So now the bank is going to ask you to bring an extra $100,000 for a total of $200,000 of equity essentially in the project. And then they're going to loan you the $1 million or the remaining $800,000, however the numbers work out. But that's a big piece that a lot of people, they kind of forget about, I think, is that you have to acquire the land. You're going to have some non-refundable deposits to get everything ready to go before you can get the construction loan. And then for a construction loan, lenders are going to want to see 20 to 25% down of the total construction budget. So money that you have to bring to the table for that closing. Now, there are certainly programs out there. I know locally here in Colorado, there's a lot of veterans. So a lot of lenders really try to work with veterans. There's a bank here locally that has a program where if you're an active duty member or a veteran of the military service, it's only 10% that you have to bring to the table to close on that construction loan. But that piece right there is something that a lot of folks forget about, is that they don't fund you the construction loan with no money out of pocket. You have to put your 20% down. It's very similar to if you went and bought a resale home. You typically have to put in a certain amount down and they'll fund the rest of it with the loan. The difference being, of course, is that on the resale side, you get your house day one. Custom home building, it's typically going to be about 12 months or so until you get your home. So once you get the construction loan, let's just kind of talk through the rest of it here real quick. Once you get the construction loan, you don't just get all of it at once. They don't just give you, hypothetically in this scenario, $1 million you get to put into your bank account. They trust you, but not quite that much. So what they'll do is there's what we call a draw process that happens throughout the build. And essentially what it is, you start the building. Let's say you start with excavation of the home. And in month one, you get all the excavation done. Well, now the excavator needs to be paid, but you probably don't have that $50,000 to pay necessarily out of pocket extra money. So your builder is going to submit what's called a draw request. And they're going to submit that to the lender. This happens a little bit differently logistically with different builders, but typically the builder is going to go through and they're going to submit that draw request, and they're going to tell the lender, hey, here's the work that we've done. We've got all the excavation done, and it was $50,000. And then they're going to show receipts for it and everything. And then the lender is going to send the money either to the builder or sometimes directly to whatever the trade was. So in this case, the excavator. So now you have drawn $50,000 of your $1 million loan. And now that process continues. So every month as work gets done, requests are made to the lender sends payments out, and the balance essentially that you have of your construction loan goes up throughout the build time. So you started out at $0. It's more like a line of credit, really, is how I like to think about it. So you started out at $0 was your balance. They said they'll give you up to $1 million. You get to month 12 and you hopefully have less than $1 million that you've drawn out, but it's probably pretty darn close. So say month 12, when you're getting ready to get the keys, you've drawn $1 million off of that construction loan, the max amount that they said they would give you. So now you've been making payments throughout this 12 months. Now, a nice thing about construction loans is you're only paying on the amount that you've drawn. So say month one is the example, $50,000. Your payment's only based on the $50,000, and it's interest only payments. So they do that to really help you kind of keep the payment lower, as low as possible throughout the build. So now you get to the end of the build, your house is all done, but you have $1 million on this construction loan and you're paying interest only payments on it every month. Well, the bank obviously doesn't want to just, have that as a long-term solution, and you shouldn't either. So what people typically do is they either refinance that construction loan into a permanent 30-year fixed mortgage, or sometimes banks have a program where it's called a one-time close, is the term that you'll hear. So you get your construction loan at the beginning, the bank lets you borrow money throughout the construction loan period, throughout the build, and then once you get finished with the build, it automatically converts to a 30-year fixed regular mortgage, kind of like what you would have probably on your house now. So that's kind of the financing process to get through a custom home build. And like I said, there's a lot of these pieces that I feel like folks just maybe they haven't really looked into it that much. They don't really understand how much money is required up front and how those payments are going to work throughout the process. So land acquisition, just knowing that if you're going to get a loan, you're going to have to put 25% down on the land, and that's going to have to be out of your pocket. And then you're also going to need to pay for all those pre-construction services. Now that varies by different builders, how they do it. Some are more, some are less. But I think that $50,000 to $75,000 is a pretty good estimate. So that means that throughout the build period, you're going to have to write it, in that before the build period starts, you're going to have to write another check to the builder for $50,000 to $75,000. Now, all that money's been out of pocket before you can actually get your construction loan. And then whenever you get your construction loan, then you're going to have to put a little bit more money down with the lender so that you kind of get that 20% down total for whatever your overall budget was. And then you go through the construction loan process. You're making those interest only payments just on how much you've drawn out. And then whenever you get to the end, you're going to convert it to a 30-year, typically a 30 or sometimes a 15-year fixed mortgage. And then you're going to have your regular mortgage payment after that. One thing that's really nice that lenders will do is if you do have a land loan at the beginning of the process, a lot of times they'll let you wrap that land balance into the construction loan. So say, you bought the $200,000 piece of land, you owe $150 on it. They'll let you take a draw out, kind of your draw number one will be $150,000. And essentially you pay off that land loan. And now you just have one loan, just the construction loan that you have to worry about throughout the build process. So I think that's a little bit better way to do it instead of having a land loan and a construction loan. Just having it all under your one construction loan typically is better. That's, financially, it's typically how most people like to do it. So, man, that's a quick rundown. Custom home building financing is a lot different than just buying a resale home. And it's a piece that, we have a lot of folks that come to us and they're all excited about it. And at the end of the day, it's just not going to work out for them because of the financing piece of it. So we're really big on trying to educate our clients ahead of time to make sure that, hey, you have all the funds needed. Realize you're going to have to pay this money before you actually have your house. So typically a lot of people, they may sell their house ahead of time. If they have a current home with a lot of equity, they'll sell that home, take that equity to help fund the project, and they'll just rent a house for, a year or two until their new custom home's done. Some people might take a line of credit against their current home so they can fund the whole build and then still stay in their current home. So there's a lot of different ways to do it. It's all just very, very, kind of case by case dependent. Of course, we always highly recommend that you talk with a licensed mortgage originator just to get all the facts of the process. But that's a process most of our clients go through. So like I said, I mean it sincerely. Any questions at all, reach out, call, text, email, hit us up in the comments, whatever is easiest for you. Just want to make sure if you're thinking about the custom home process, that you have the information to make the best decision ahead of time. And like I mentioned, if you're here in Colorado, hey, reach out to us. We'd love to have an opportunity to see if we're a good fit for you. And if this is good information, good content for you, like I said, maybe you're thinking about the process, take the time to subscribe to the channel. Love to have you guys check us out. We're trying to get new content out to you every week, again, just to make sure that the custom build process goes as smooth as possible.